And finally, a solid set of results on the energy sector. Exxon and Chevron topping the earnings forecast, with shale drilling fueling that stronger output. Simone Foxman has the details. Simone, what have we got?
Yeah, Manus, the challenge for both of these companies this morning was to show shareholders that they can continue to return capital despite a falling price of oil, especially in the fourth quarter, and despite the fact that both shares have seen declines over the past year. And they did it by beating estimates pretty handily. Adjusted EPS for Exxon coming in at $2.48. The expectation had been for $2.22. Chevron coming in at $3.45 on a per share basis. The estimate had been for $3.22. Already, these companies were both among the top 10 payers of combined dividends and buybacks for companies across the S&P 500 over the past 12 months. This morning, we got word from Chevron that it would boost its dividend by 12 cents. Exxon, for its part, saying that it would resume buybacks of its shares after it completed the acquisition of Pioneer Natural Resources, says this morning that that is expected by the middle of the year. Both companies also talking about ramping up production from the Permian pretty dramatically. Chevron by 10% over this year, Exxon by 7%, but note that it's going to double, overall double its output when it does complete that acquisition of Pioneer. And Exxon's trading unit delivering $1 billion in gains, offsetting some of its loss from the declines in oil. So are investors convinced? The initial reaction appears to be yes, though again, coming off a pretty terrible last 12 months.